Greetings, great learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, we're going to be talking salaries journal. Salaries journal. Did you know that every employee must receive a salary advice that provides information about the gross salary, deductions, as well as the net salary? Here are today's objectives. By the end of this lesson, you should be able to understand what are salaries, prepare the salaries journal, post from the salaries journal to the general ledger as well as the trial balance, record salaries in the CPJ, that is your cash payments journal. Here is what you already know at this point. At this point, you already know the preparation of the CPJ. We already have covered the cash payments journal. We have prepared the cash payments journal. And we have also posted from our journals to the general ledger. So in today's class, I'm going to be posting from the journals to the general ledger as well. And remember, you have done posting already. Here are new words and language that you're going to learn from today's class. The first one, employer. What is an employer? It is a person or an institution that provides employment to others and pays them for the services that they would have rendered. So if you know of any business that has given someone employment and then pays them for that, that is an employer. An employee is a person employed by the employer and paid for the services rendered. So an employee, therefore, is the one who is employed by the employer. What is remuneration? Remuneration is payment to employees by the employer. So you will be given remuneration once you are employed by the employer as an employee. We will define some few words. The first one is salary. What is a salary? Make sure you have somewhere to write so that you can take some of these definitions down. The first one, as I've said, is salary. This is remuneration paid to employees on a monthly basis. So if you get remunerated on a monthly basis, we call that a salary. The next definition, gross salary. This is your basic salary plus bonuses or overtime. That is your gross salary. So as we are going to be doing some calculations today, remember that your gross salary is your basic salary plus your bonuses or overtime. Then we also have what we call net salary. Your net salary, this is your gross salary less the deductions. So we have to subtract deductions from the gross. So then we can arrive at what we call net salary. The net salary is what we also call your take home. This is what you then go and spend. Salary scale. We want to introduce the salary scale. What is the salary scale? It shows the employee what is the starting salary notch. So when you get employed, you'll be informed of your salary notch. So that is, what is your starting salary? So the salary scale is what then shows the employee what is that starting salary. The employee can see what his future increments are going to be. So you can then see in the next 2 years how much you'll be earning. That will be from your salary scale. There is a minimum salary and thereafter a certain amount in annual increments. So there's a salary that you are given at the beginning, and then there will be annual increments that you'll be receiving as an employee until you get to the maximum salary. So today I'm going to demonstrate how to calculate your annual salaries as well as monthly salaries when you are given a salary scale. Make sure you keep following today's class. Here is a salary scale. We're going to do some calculations. So I need you to have your calculator close to you so that we can do some calculations together. Let us begin. We are told that Impala Traders employed Y seeded on the 1st of January. The following annual scale was agreed upon. So at first we started with 180,000, and then it will increase by 12,000. So this 12,000, this will be the increase. It will continue increasing by 12,000 until it reaches 204,000. When it reaches 204,000, it will stop increasing by 12, but will start increasing by 18,000. So it will continuously increase by 18,000 until it reaches 240,000. Let us do it together and calculate. So in the first year, you will not get an annual increase. So here there's no annual increase in the first year. But you will get an annual salary, and the annual salary that we see here is your 180,000. 180,000. For you now to get your monthly salary, you will now say 180,000 divided by 12 to get your monthly salary, and you get 15,000 rands. That becomes the monthly salary. We got it by saying 180,000 divided by 12 months. This is annual, 12 months, and this is now monthly. In the following year, this employee, Y seeded, will now get an increase of 12,000, get an increase of 12,000. That means the annual salary will now increase. We'll now say 180,000 plus the 12,000 to give us 192,000. We can now calculate the monthly salary. Easy. We simply take our 192,000, we divide it by 12 months, and we'll get 16,000. 16,000. His salary will increase again in the following year, and the annual increase is still 12,000. Now you say 192,000 plus 12,000, and then you get 204,000. We want to know how much is the monthly salary. We will now take our 204,000, we divide it by 12, and we will get 17,000. The moment we reach 204,000, we will no longer increase it by 12,000, but we will now start to increase it by 18,000. I will then come here, my annual increase therefore becomes 18,000. My annual salary therefore will be 204 plus 18,000, the increase. Then I will get 222,000. 222,000. For me to get my monthly salary, I'll take my 222,000 and I divide it by 12. That is how I then get 18,500. 18,500. That becomes the monthly salary. And then the annual increase will still remain 18,000. Then the annual salary will now be 222 plus the 18. I will get 240,000. Then, for me to get my monthly salary, I'm now saying 240,000. I divide it by 12 to give me 20,000. That is how the salary scale operates. We will go for an ad break. See you shortly.